Hey everyone, it's Nick with Us versus Herd. Today I'm going to be covering bouncing back from big losses, or maybe even you blew up your account. I mean, over the last 12 months, I would say we've seen a wide range of, traders enter the market, exit the market, everything in between, and also some kind of tips and tricks that I use when I'm actually on a losing streak or morale is down or that kind of thing. So first, if you find value in this video at all, hit the like button. And if you want to join the UVH fam, links are below in the description to our Discord and our options trading group on Facebook, or you can find all that information at usversusherd.com. So let's get into it. First, I want to show you why I'm making this video is because I'm going to share my screen here. Essentially, after running Us versus Herd for quite a few years, you kind of see the highs and the lows of the public interest, right? When it looks like the market is giving away free money, the interest in the stock market goes extremely high. This is Google Trends tracking interest of the stock market. You can see, we've had these huge spikes and then huge drops, right? The first big spike we had here was in 2020, obviously during the pandemic. February, March is when we had enormous interest in the stock market, and then that tapered off, right? And then again, if we go back over the past 12 months here, again, back in January when the market was just skyrocketing, it was just skyrocketing. And then when the market got hard, obviously it started to taper off, and then the same thing happened back in October, November, August. You can see we had a nice spike up in here, a nice spike in August. Market was on easy mode, and then it tapered off. And you're like, why does that happen? It's because people start losing their money, and I start getting messages from people saying, oh yeah, Nick, what do? I lost 60K in the market. I lost 10K, and I know, I get it. It's tough. Same goes for options trading data here. If we look over the past 12 months, right? We had a huge spike in January. This is 2021, and it's tapering off. Now, if we can kind of compare this, what happened like October, November, and then back in February, right? So if we look at particularly Qs, back in August when market was in easy mode, when search interest was high, people were like, people were hitting me up left and right. Never before has this happened where people that you don't talk to in years start saying, hey, is this stock good? Is this stock good? Especially when GameStop, which we'll cover in a minute, GameStop is, hey, should I invest in GameStop? Should I not invest in GameStop? And obviously, I'm not a financial advisor. And for me, it's a lose-lose situation. If you're like, oh, yeah, get in on that trade and then they lose all their money, then it's your fault. If you say, oh yeah, don't get on that trade and it skyrockets, then it's your fault again. So for me, I just say, hey, if you do whatever you want to do. If you want to invest in GameStop, just use money that you don't really care about or whatever, whatever you want to do. It doesn't really matter to me if you invest in GameStop or another company at all, personally. But what happens is the market starts going on what we call easy mode in the UVH fam or in the chat. Is it just every day the market's going up, our market's going up, and then we have these big drops where people keep buying the dip, and then they start losing the money. And the big issue here, let's go back to October here. It was easy, and then we had a massive drop. And number one issue, what people start to do is when there's a big drop, they start to buy, right? And I'm going to average down. And if you're trading options, like if you're in stock, that's entirely different. But if you're options trading, you can't keep averaging down because also time is running against you. The longer that the position is against you, you don't have much time. Even if you bought like 3 months out, this thing took 3 to 4 months to actually recover on the NASDAQ, right? So if you keep averaging down, like how much money do you want to keep throwing at it? I mean, sometimes averaging does work out. I'm not saying don't average down, but what I'm saying here is you want to be careful how many times you average down and why you're averaging down, and if it makes sense. Like if the situation changed, like here, it abruptly changed, right? When the market's going straight up, and then we had a massive drop, and then it kept going lower. Qs went from, it ripped up to 304, came all the way down to 260. that is a massive, massive drop. Now, if you bought stock, you probably recovered, right? It's at 331 right now. But as you can see, the market then is not in easy mode. If you look at what happened recently, January, so November we started to recover, December we started to recover, January we did very well. But then what happened in December? What happened in February? Markets not in easy mode. This went from 338 down to 299. This was huge. This was a huge drop in the Qs. People were getting massacred. Tesla was down. Everything was down. And I think like for newer traders, I think the number one thing is knowing how much risk you have yourself exposed to. Because what a lot of people do, the people will message me and be like, "Hey, Nick, I don't know what I'm doing, but I threw 10K at it, threw 20K at it. I don't know. It seems like everyone's making money over here. I'm going to make money too." It's like when you're at the casino and you see a guy over here just starting making all this money. You want to go like this table's hot. I want to be at that table. That's what it's like when the market's just running. Everyone's like, I want to sit at this table and I'm just going to put money in there. I have no idea what I'm doing. So, you obviously have to educate yourself, because if you're putting your money at risk, you should care about it, because there's potential. You could lose a significant amount of money, whether it's a 10% haircut, 25% haircut, or if you're in an option that's far out of the money, you're going to lose a lot of money. So how do you recover from this mentally, right? And what I do is you have to pivot. You have to understand that the environment changed. And that's what a lot of new traders don't understand. They just think the market's going to go up. The market's going to go up. Because, look at this chart. Market went up. People were just like, I'm just going to throw money out, throw money. And then when it gets hard, they got burned and they lost all their money. So what was the point? What was the point of making all your money here just to lose it right here? What's the point of making all your money here just to lose it right here? Like that's the frustrating part, is like, 6 months worth of gains gone in a week or even a day for some traders, right? Like, what is the point of trading if you're just going to lose all your gains in one day? And that's why you have to keep your risk low. You can't just keep piling money on. And that's why you want to take, if you're making good money in the market, take out bi-weekly or monthly withdrawals, take money out, right? But recovering, let's say you are taking a massive hit to your account. What do you do? How do you get over it? Buying the dip, just blindly buying the dip, is not the answer. It's not the answer. You have to understand where you are, and you have to understand, what's going to happen next. Are we going to go lower? Or do you think it's just going to bounce back up magically, because that's what the market always did? And the market isn't magic. The market's going to do whatever it's going to want to do. It's going to bring you in, suck you in. It's going to spit you out, but you're not going to be the same person after the market is done with you. We've all been through it. So I think it really separates, like, are you really serious about trading? Are you not serious about trading? If you're not serious about trading, invest in some longer term options contracts or buy shares and just take it easy. But if you're like, I want to be a day trader, I'm going to quit my job, I'm going to do this, like you have to understand there's going to be great times in the market and terrible times in the market. You also have to understand when to hedge, when not to hedge. And if you're continuously like losing money day after day after day after week and weeks and weeks and months, you have to stop and say, obviously, my strategy is not working. Maybe you have a good idea, but the strategy that you're applying to the market, it's just not working, right? So you have to go back to the drawing board. And how many times in the last 12 months we had to go back to the drawing board? It's like, okay, we're short the market, we're long the market's flat, the market's doing this. Okay, buying calls works, buying puts works. Shorting credit, shorting spreads works. Shorting naked put works. Like, when you're trading, you always have to adjust. You always have to kind of think about, where is the market heading? What's it going to have to do? And if you don't like that challenge, then maybe trading is not for you. Maybe if you're in it for just the money, you're not going to get a whole lot of satisfaction out of this. You have to have some passion. You have to care about this. You actually have to like this. If you don't like trading, if you're just doing it for the money, don't trade. Save yourself the headache and say, you know what, I'm just going to put my money in my 401k. Maybe I'll buy some Apple stock or whatever and call it a day. Get on some IPOs, maybe Airbnb or Roblox or something, and have a good day, right? And you can if you hold on to that investment, you can make a lot of money, right? But everyone wants the quick money, right? So you need to really understand what you're doing it for, what the purpose of this is, because when you have losses, what's driving you to the next level? Like if you have a monetary loss, like, and you just quit, then that tells me you were never in it to learn the craft. Like trading and investing is a craft just like anything else. It's a skill that you need to acquire. And if you just quit like that, it means you were never serious about this in the first place. You were never serious about this in the first place. Like for me, when I was first starting trading out and I had losing month after losing month after losing month after losing month, I knew deep down, this is what I wanted to do. This is what I was called to do. I'm going to push forward even though it's hard, right? That's what I wanted to do. When things were hard, I focused and I figured out, okay, what am I doing wrong here? Why am I losing money? Why are people making money here when I'm losing money? When you lose money, people are still making money. So what are they doing differently than me? How is it? Is it my emotions? Am I trading too big? You got to think about that. You really have to think about that. I mean, when you're trading, it's a battle against yourself every single day. I have to suppress my greed. I have to suppress my emotions, and I have to just take it easy and just see what's the market telling me today. It's telling me to go long. It's telling me to go short. How's my positions doing? Are they doing well? Do I need to make any adjustments? Do I need to defend any positions? Did some news come out just destroy one of my positions? And instead of getting angry about it, instead of getting angry about a big loss, just understand you put yourself in that position, right? You are the one that put 10,000 or whatever amount of money on that position. I didn't do it. The guy next to you didn't do it, and people just get angry. Like they get so angry. But this is what you have to reduce your size. If you're getting very, 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 very emotional about trading, you have to reduce your size. And that kind of brings me up to my next GameStop point here. Is GameStop triggered so many emotions, right? Everyone wanted to get rich. And I get it. Everyone wants to get rich. Everyone always wants to get rich. Everyone, like, they'll send me messages like, hey, Nick, can I just, can you just trade my account for me? I'll pay you money. I'll give you 10%. I'm like, why would I do, like, first off, that's illegal. Second of all, like, why would I waste my time and make 10% off of your account? It makes 0 sense to me, okay? Makes 0. It's like, oh yeah, let me do all the work and you get all the profit and we'll just throw you 10%. No. That means you're lazy. If you're that lazy, I mean, get out of here. Get out of here. I'm serious. So GameStop, it brought the whole world in. Everyone's like, oh yeah, I had 1,000% winner, 100% winner, blah, blah, blah. But this is where people got into some serious, serious trouble. Sure, there are winners on GameStop, Wall Street Bets and on GameStop and all of that. But I mean, this stock went from 20s to 40s to 43, then came all the way down from 43 down to 37. You know how many people chased this and lost money? There were thousands upon thousands of people losing millions and millions and millions of dollars collectively, right? Collectively. And if you're emotional about a trade, emotion and conviction are two different things. If you feel convicted about getting into a trade, that's one thing. If you feel FOMO or fear of missing out and you're afraid you're going to miss the run, listen, you're going to be too emotional about that trade. It's probably not in your best interest to actually trade that. I traded a little bit on GameStop, but I didn't have really any emotions to it. I just didn't care. When I enter a position into something like a meme stock or something like that, I know that there's a high probability that I'm going to lose on the trade. And if there's a high probability that I'm going to lose on the trade, then I scale back my risk a lot and say, okay, whatever I put in, I could afford to lose, and that was the risk I was willing to take when I entered the trade. But what people did is, the news was running it, everyone was running it. I mean, even like people's grandma's like, oh yeah, I'm gonna buy game. This is like back in like Bitcoin and all that, like in 2017. Everyone's like, oh, I need to get into crypto and do this, and yeah, and you see how crypto did the same exact thing, and you can kind of see when you're trading with massive amounts of people, media coverage, and now you've seen it like real world experiences. Bitcoin, crypto in 2017, 2018, GameStop 2021, AMC, those kind of stocks, meme stocks. When people's emotions are triggered, and you have the herd. This is why we're called us versus herd. The herd comes in. That's your time to get out. Like if you're holding here, and then the herd comes in, we get out. We get out, right? So going back to here, the trends, people think it's easy money, then they find out it's not easy money, and then interest starts to wane. I mean, this is actual hard work. So, bouncing back, if you want to bounce back from trading, if you had massive losses, you blew up a couple accounts, you're down 50 grand, whatever the case is, it's irrelevant. If you want to bounce back, you have to be willing to put the work in. You have to be willing to say, I can do this and I want to push forward, because you're going to have more pain in the future. The pain of the market just doesn't go away. But listen, I would rather have the pain of the market than a 9-to-5 job and someone being my boss, right? I haven't had a boss since 2010, 2011. I'm going on 10 years bossless, and I am my own boss, right? And I know that the market's hard, but what's harder? Sitting in a cubicle all day, regretting that I should be doing something else. Should I be doing something else with my life? Being on Zoom or Microsoft Teams calls that don't even matter because people just want to feel good because they want to talk about themselves. Like, what's harder, sitting through that or putting in the real work of trading? So if you want to make your life better, if you want to push through the pain, then trading's for you. That's how you bounce back, and take it a very small steps at a time. If you were trading $10,000, $20,000, start trading $100 to $200. Get the groove back, get the mojo back, feel good, start getting some good momentum, right? And then if you have like 3 losing days in a row, if you lost 3 days in a row, stop and just sit back and say, okay, what did I do wrong? Last 3 days, didn't see the market clearly. Maybe you need to take a break, but you need to focus. What did you do wrong? What did you do right? Make a list. This is what I did right. These are the trades I did right. These are the trades I did wrong. Was it the strategy that you applied to those? Did you chase? Did you not have a stop loss? You'll start making a list, and you'll start seeing trends, and you'll say, oh man, I just need to concentrate. You got to work on yourself so you can become a better trader. That's how you get over this. That's how you get through it. Know that there's a reason that you're trading. Okay. If you watch this video to the end, comment watch to the end. Hopefully you guys learned something from this. If you guys want to join the UVH Academy, link is below in the description. As always, stay safe, stay green. It's us versus herd.